Hey, good afternoon, everyone. This is Julie. I want to go over an opening range strategy using Jats PT. So the first thing that you've noticed that I've done is I've put some PT levels on the chart. These are the 1 hour IB, so the first initial hour of trading. And that's pretty much what the institutions use for their initial balance. So we can put the levels for R vol and H vol on the chart, both open and close. And that gives us a pretty good snapshot if it's going to be an inside day contained inside the one, up or down. You can see we had sort of a split distribution between the lower R vol 1 and the upper daily 1 R vol. And the price stayed in the lower end of that range on Friday um, during the RTH session. And let's pull this down so that you can see it. Um, when you use R vol, H vol like this, it's hard to get a real breakout because it encapsulates the range so well, and the algos trade to the levels a lot of the times to the precise level. But here's a good example of a breakout, and this is what you'll see maybe once or twice a month, where the range is nice and compressed. Look at that. All the levels aligned so that that allowed the breakout to happen versus the levels all being spread out and the algos ping off of each different level and get, the harder to break out scenario. So here's another good example, came right down to the 1 hour IB3 and then went up. So this is not daily ranges, these are just 1 hour IB on the R vol H vol. So again, put the 1 period and the 14 period on both the open and the close. Here's a good example of a breakout. And never came back to even test the 1 hour AB. It took off. So here was a good example of a mean reversion. Textbook came right back to the middle of the range. So now you understand the framework, the 1 hour IB framework. And, we can use the GEX modeling provided in your morning report to let you know whether we think that the dealers are going to be positioning themselves with positive GEX or negative GEX. And that'll help us decide, whether to lean on the support or breakout trades if it's negative GEX. And the next thing we want to do, and also look at the morning report for the key levels, obviously. We provide where the peak gamma is that the market likes to turn to on the reversion to mean trades, as well as max pain and our key levels for open interest and Jats PT key levels. The first and foremost important thing before we even address, how to trade this strategy is, is the daily range high, medium, or low? And we put the H vol on the chart and then put the R vol on top of it. So you can see how the algos trade between the 1 and the 2, or the 1, 2, 3, the 2 and the 3, and or are they inside or coming back out, or going out, outside, or coming back inside. So here's more. You can see that just 1, 2, 3, and then excursions out. So this will help you decide how to trade each day, most importantly, in addition to the GEX. I mean, we have the magic sauce with this R vol H vol. It's better than GARC, and it's just, phenomenal to help us determine not only is it low, medium, or high volatility, but we have our actual range projections. We can see that the R vol is inside the H vol and the range was contracting, and you look at Friday and it's exactly what happened. It's, small range day inside the one. So this, works really well. The next thing to consider when you're putting together your opening range strategy using Jats PT is to put a 60-minute chart on your screen. You just put a 60-minute chart up and put the Jats oscillator, the R vol, H vol on it. But here you can see the R vol excursions reach up to the standard distances, right? 25, 34, 50, 68, 95, 100, and out. So they trade to these standard distances on their own time frame as well as daily. We can overlay a daily range on top of the 60-minute range. So put this as daily. Put this on screen 2, panel 2, and we'll pop it right on top of it. And there we go. And so now you can see that some of these hourly excursions will even reach the daily 3 or higher, or get stopped at the daily 2. So it all comes into focus depending upon if you're above or below the daily 1, right, which is key. If you're below the daily 1, you're going to be fading these excursions, right, back to the mean. Especially if you get an excursion in the first hour, right? You're going to be wanting to mean revert that back. Versus a breakout day where the daily is outside, the R vol is outside, the daily R vol is outside the daily 3, or, daily above the daily 2, then you're going to be expecting these lower time frames to match and give you stronger ranges to trade intraday, right? So this is going to be another one of your considerations for how you address your trade versus just a standard rote I've exited above or below a 15-minute line or a 5-minute, 1, 2, or 3. I'm going to be, what are the odds of me reaching the 2 of the time series or the 3? Well, the odds depend upon whether you're inside or outside your volatility. Are you inside the daily 1 on the 60-minute, or is your daily R vol outside the daily 2, and you can expect more of an excursion of that 60-minute between the 1 and the 2? Okay? So you need to have these, considerations in mind, really, to put your algo together. And so you can code this in Bloodhound so that if you are inside the daily 1, you can come together, put together an algo that will show that you're, below the daily 1 on the 60-minute H vol, R vol rather. and that will, help you with an algo stay on those edges, running, returning back to the mean, versus if you're above that daily one moving out, you're going to be trading those range expansion opportunities and trying to reach to those outer targets. Does that make sense? So, if you would like help with your Bloodhound code, um, I can help you with that in a different video or a different training session. I'm not really here to give Bloodhound training, but I can show you how to get filters so that if you're inside the daily one, you could have a filter for that for your algo or with Bloodhound, or if you're above, you know, daily two, or, if the 60-minute R ball is somewhere, I can help you with those refinements. Blackbird also, just using Blackbird by itself without coding Bloodhound, you can create a volatility envelope in Blackbird by conditional volatility based. On the profit target, you can put a trailing rule in, like set the original profit target to be Jats PT 1 hour, PT3, for the target, or PT2, whatever, and go in as a conditional trailing rule and put that it's volatility based if the daily RVOL is 1 is below the daily RVOL 14, then the profit target is PT1, right? Or, R1 of the 1 hour IB, or you know what I'm trying to say. And conditionalize it that way according to volatility. So there's different ways to do it. So we can talk about that in a different video, but I'll put this template here into the training room, and let me know where you're thinking, what you would like to do, if you would just like help breaking out of RVOL, um, and get a signal, or do you want it, more refined, conditionally based. Um, I think it's best to use that market analysis that you get in the morning to see what, the dealer position flow is with the options, and put that into the consideration also, along with the volatility. So when you're using both realized and implied volatility, you can take advantage more of those divergences. So, buy that um, RVOL 1 in a low volatility environment. In fact, I think I even sent out a Twitter Friday saying just that, what do you do in a low vol? Do you buy the R1? And sure enough, it went back up. It's the type of behavior you would expect in low volatility, is to reverse back to the mean at support. Okay. All right. So that's it. Let me know. I'm going to put this template in the training room, and then I can help you build some Bloodhound templates next week. All right. Thank you guys. Appreciate it.